MicroStrategy and Saylor not stopping buying Bitcoin. We got a lot to talk about.
BlackRock's closing the gap.
Crypto AI projects have gone up. So isn't this good for the US economy? I don't think the time is far where central banks are going to hold Bitcoin as part of their reserves. I think they're going to
It could already be happening. Made the big move into Bitcoin. $800 million at a 0.625% convertible senior notes that are due in 2030. For sure. He's got skin in the game. That's for sure.
It's a very sensational title for...
Right. For an academic paper, it's very sensational.
Paper.
I don't think, correlation is necessarily causation there. Like 80% of the activity on Binance was Sybil. It's exciting. It's exciting where this is all heading. I love being sort of at the base layer of all this.
Welcome everyone to the 18th edition of The Rundown. I'm Shiv and I got my co-host Michael with me, and you're welcome to your one-stop shop for all things crypto and on-chain analysis with our residence expert, Michael Nato. Michael, $70,000 Bitcoin breaching, ETF flows, record by record, week by week, Ethereum ETF, CFTC, new digital asset taxonomy, MicroStrategy and Saylor not stopping buying Bitcoin. We got a lot to talk about. How have you been?
I'm doing great. It's great to be back. Good to see you again. And yeah, lots to talk about. Bitcoin finally broke through that 70K market. It had kind of touched 69K a few times and then got rejected. We finally broke through. A lot to get into this week, so let's jump in.
Amazing, man. And thank you guys. Most of you saw the thumbnail of me wearing blue glasses, then the trailer where they realized that I was sick. No longer sick anymore, so thank you for your wishes. I'm back without my blue party glasses on. Yeah, brother, let's just go straight right in. BTC inflow data, should we look into that?
So ETF data, still looking strong. We're actually over 4.1% in total of the entire circulating supply of Bitcoin is now held by these ETFs. I think I saw that BlackRock just surpassed MicroStrategy. We're going to talk a little bit about MicroStrategy later and, what Michael Saylor's been up to in terms of raising even more capital, really cheap capital to buy Bitcoin. But yeah, BlackRock recently surpassed MicroStrategy in terms of total holdings. And in terms of total holdings of all of these ETFs, it's now over 800,000 Bitcoins, which is about 4.1% of the total circulating supply. Again, I'm going to toggle this over and I'm showing some data now on just the breakdown by ETF issuer. So Grayscale is still number one. BlackRock's closing the gap. Almost about 50% of the Bitcoin that Grayscale has now 197,000 Bitcoins for BlackRock. Grayscale is at 395,000. And then Fidelity's coming in number third. ARK is number four. And our friends over at Bitwise doing great at number five. So yeah, I mean, the Bitcoin ETF just continues to sort of accrue assets under management. I don't think it was a huge week last week, but still growing, and we'll see where it goes from here.
Oh, brother, absolutely, man. Record inflows week after week, by all the Bitcoin ETF issuers, most of them at least. And I'm just curious, what do you think? Like this growing institutional adoption, what does it mean for the long-term prospects of Bitcoin, but also more for crypto markets in general, because we're seeing altcoins pumping up as well. So this institutional flow that we're seeing in Bitcoin ETF, what does it mean for the rest of the crypto assets?
It's interesting. I put a post up, I think yesterday on LinkedIn, just sort of like doing some pattern matching. I think we talk a lot about pattern matching. When you've been through a few different cycles, you sort of notice similarities through some of these cycles. And in this cycle, this is like the first one I think the crypto industry has talked a lot about how the institutions, are coming, and we sort of finally have them here. And it's been interesting to observe the behavior because it actually looks very similar to me of like almost everybody else that's come into crypto and the path that almost every crypto native has taken. I know myself, I came in through Bitcoin.
Likewise.
Initially, you did the same. And I think, maybe that's changing a little bit with NFTs and just like the growth of the entire, meme coins and everything else that's happening in crypto. But with this ETF in particular, you're seeing TradFi come in. They're speaking very highly of of Bitcoin. I've noticed even like the guys over at Bloomberg, I would say less. They're like a little almost skeptical of Ethereum and some of the rest of the space, which to me is just like classic like first cycle
Absolutely
behavior. You sort of get orange pilled with Bitcoin first, and like the light bulb goes off, especially if you go deep into it and you really get into like proof of work and like how mining works and just the real like economic incentive structure. You sort of get really into Bitcoin, and it's usually like the sort of Bitcoin narrative that is driving your interest in crypto. And that's what I see right now from TradFi. I do expect there to be a rotation, even though I think a lot of people are saying, well, if traditional finance is buying up these ETFs, they're not on chain, right? They're just buying a wrapper of Bitcoin through their brokerage account or a 401k. They're not actually setting up a wallet or maybe, setting up an account on Coinbase and going crypto native. So maybe it's like Bitcoin's cycle, and Bitcoin's going to actually like really kind of control this cycle. I don't think that's going to happen. I just think that eventually, I think, if you bought some Bitcoin through the ETF wrapper and you saw it go up and then you're looking at the rest, but you're probably starting to look at CoinMarketCap and you're looking at the list of crypto assets there, and you're probably seeing that some of the ones farther down the list are growing up and sometimes 50% in a day. And so I just think that, human behavior, greed, like I just think that there is going to be that rotation, even though you have this Bitcoin ETF in this cycle. So we'll see the rotation. We've talked a little bit about this, how, Bitcoin tends to lead out of the bear market with dominance, and we've been seeing that. And then, my thinking here is that we've now sort of pierced through all-time highs. As we continue to do that, I expect there's still to be a rotation. You're seeing meme coin season. I mean, there's certainly stuff happening, but you really know the rotation has happened when Bitcoin's dominance actually turns down, and we haven't really seen that just yet. So I don't think we're at altcoin season yet, but I do think it's coming. I'm curious, what are your thoughts on this?
Yeah, look, word by word, exactly the same thing that I would echo as well. It's very well known that Bitcoin leads, and then it flows to, the popular layer ones, and then it flows to the other altcoins. In my humble opinion, I think altcoin season has started. It has begun because of the just crazy price performance that we saw in a lot of meme coins. And not only meme coins, if you look at, I think the last 2 weeks or last 3 weeks, deep in the things that we have covered, deep in projects have gone up. Crypto AI projects have gone up. Tau being one of them. One of the tokens is now above $700. So I think all season has begun, in my humble opinion, based on performance of some of the popular narratives. So yeah, I agree with you. Jumping quickly on the Bitcoin price, $70,000, breached it for the first time ever. Psychological play there. Do you see a pullback, or do you think $70,000 is now going to be the support?
Good question. We have not seen a significant pullback. We had a little pullback, I think, when the ETF came out and it maybe went 10, 15%. It was kind of a sell the news event. However, we haven't seen like an aggressive pullback, I would say, since this bull market really started kicking off. So I'm looking for one. I don't really see one like imminent though. Like when I look on chain, like I don't see like a just crazy funding rates. Like the funding rates when I looked yesterday were about 0.02%. In the last cycle, they got up to 0.134%. You do tend to see corrections once you get to like 0.04. So this is like the weighted average funding rate across all of the exchanges that I'm looking at. So I don't think we're at those like mania levels just yet. It sort of feels like that. I agree with you. If you look at certain sectors of the meme coins and things, we're seeing some of that. But then, the Coinbase app ranking and stuff, that's still like in the hundreds. It's not getting up near the top 10 or anything like that just yet. And I would say anecdotally, I'm not seeing too much. I probably need to go to a wedding or something and just see if people are talking about crypto. But yeah, I would say like we may end up running a little bit more and then we get the correction. I'm not sure. What's your gut? This is almost more of a gut instinct type thing.
I know. Look, I'm totally with you. It doesn't feel like we're in the hype cycle till yet, but the price suggests that it has begun. But you are right. Having said that, in Australia, crypto.com actually rose to #1 finance app recently. So in Australia, I think we're probably seeing things spicing up a little bit, but Australia is such a small market. I think it's the US that dictates at a global level what's the mania level and all. And so I agree with you. Like we have discussed so many times, we still haven't seen Google Trends suggesting people searching about these things. And again, like a lot of my colleagues in India, people are still not interested about Bitcoin. I think it's still a very institutional driven and a Bitcoin only driven. So I think, yeah, we're probably going to see a very longer version of this hype cycle, especially with the halving coming up soon. But yeah, it's important that we keep this in mind that maybe some FUD might be on our way, because whenever we see, all-time highs, we have similar number of trolls ready with their research papers attacking Bitcoin and saying no intrinsic value, or crazy things like Ponzi scheme and all that. So I think we're going to talk a little bit about the FUDs as well, right, in this episode?
We are going to get to that. I do want to just touch on real quick here, and I'm actually going to just share this tweet. So we had Tom Dunleavy on the rundown a few weeks ago, and Tom's the chief investment officer over at MV Capital, and people should check out that episode. I think it's really interesting just hearing his perspective on sort of the private markets out there right now. And he tweeted yesterday that things are getting really crazy. He's almost like having a hard time just paying attention to the public markets because things are heating up so much in the private markets. So, how does that factor in? I think it's interesting nonetheless to see he's saying like, even projects that recently launched are already seeing 10x to 20x diluted values when they raised like just last year. So like, 3 to 4x valuations just over the last few months. We're moving pretty fast here. The halvings next month. We'll see. When I see this type of stuff coming from the VC space and the private markets, it tells me like if this much capital market activity is happening now, these things don't start to get expressed in the market probably for another year or so when these projects actually come out with the token and there's airdrops. And so this cycle, even though we're moving really fast and some people are saying it may be shorter, I still think we end up extending into 2025 and like this is going to go for a little while. So that's, I guess, my base case. Is that your base case, that we are this is not necessarily a short, because we've never actually breached all-time highs before the halving before. So that's one difference in this cycle.
Agreed. I think this is going to be a longer hype cycle. And I also agree with what Tom is experiencing. I'm not a GP, but I'm a LP at a venture capital fund based out of Sydney. And I can see by their reports that it's starting to look good now. The valuations, they are giving me a distribution soon as well. So yes, private markets in crypto are starting to come back up again. And I think there is increased deal flow. However, I would say that based on my, association with a venture capital fund based out of Sydney, it's not at a 2021 level though. So it's still not at that 2021 level. But yes, things have started to pick up in the private markets within Web3 world as well. That is true.
Yeah. And, so obviously, a lot of momentum out there. I've been trying to follow a little bit of what's happening with potential ETF. We've talked a little bit about this. Obviously, the Bitcoin ETF's been wildly successful. Issuers are certainly going to be looking at this Ethereum ETF. This is another massive economic opportunity for these issuers. So I following this, and the Bloomberg guys were so accurate with what played out with the Bitcoin ETF. I've been following, Eric Balchunas tweeted out yesterday that they actually just sort of dropped their expectations for an ETH ETF. This is for the May, right? This is only a couple months out, but they dropped that down to 35% chance of approval for May. So I think it was at 50%. I expect to see an ETF this year. I think I would agree that probably May is too aggressive of a timeline. And I think the reason they're dropping the chances of approval are related to just the engagement that they're seeing from the SEC on this. And so that's really where that's coming from. But I put out a post yesterday. We put out a report last week with the DeFi report where we went through and actually shared a new product that's in the market in Europe. So Europe has already issued spot total return staking products. And so I'm just expecting it to come. I just think the economic incentives are just too high for this not to happen. But some of the reasons for it, and I listed 10 yesterday, is, Ethereum is the only other crypto asset that has a ETF in the futures market already. So this is a prerequisite to getting a spot ETF. Not only do they have one, has lots of, tons of open interest on it. There's already 1.4 billion just on CME with the futures product. Coinbase has done a ton of testing on the sort of correlations between futures ETF for Ethereum and then the spot exchange markets, and it's a 99.9 correlation. It's actually higher than Bitcoin's was. That's something where the SEC potentially has a chance to strike it down if they see that something's off here. So that's another sort of bullish indicator to me. When you look at just like the daily trading volume of Ethereum and you look at that versus any other ETF, like trading in the public markets, especially in the US markets, I mean, Ethereum trades more than like almost any other. It's a very, very liquid asset. So that looks good. The bid-ask spread, this is all coming from like Coinbase doing a lot of testing on this across, a number of these exchanges, very tight. So that kind of looks good and it makes it harder to manipulate markets. CFTC has come out and said that ETH is a commodity. Even the SEC sort of did that, not with formal policy, but through the Bill Hinman speech back in 2018. In my opinion, the courts have already spoken on this matter by essentially forcing the SEC's hand to approve the Bitcoin ETF. I sort of feel like that's the indicator to me that an ETH ETF will come probably this year. And then the other piece of it is just like you have BlackRock, right? Again, BlackRock, Fidelity, they're looking to issue. There's just too big of an economic opportunity for the issuers of these assets to not push for this. So I can't imagine it just being blocked. It probably isn't going to happen in May, but probably sometime this year. Curious how you're thinking of this. Like, I think, again, the Bloomberg guys dropped the expectations for May, but I still feel pretty good about this for 2024.
Yeah. So look, just quickly, and there have been advanced economies that have approved spot Bitcoin ETF much before US, right? Canada already had a spot Bitcoin ETF, but the US financial system and the US high net worth wealth and institutional financial institutions wealth is just so much that is what drives the price, really, right? And it's great that in Europe there's already a spot ETF, right, for Ethereum. I'm curious as to, why suddenly less optimistic? Is it like, are the people who were surveyed for this by Bloomberg, are they less optimistic for May, or are they just less optimistic for the foreseeable future for Ethereum ETF?
I think it's primarily just for May. And I think the reason for this is just, and I'm not as deep in the weeds of this, but like there's a lot of engagement that needs to come from the SEC in terms of questions that are being asked and just like how they're working with these issuers. And I guess they just haven't really seen that. And they're probably just comparing to what they saw with the Bitcoin ETF. So I think that's part of it. I think they're also saying at the same time, it should be approved. Like they're saying, hey, this actually should be approved. There's almost no grounds for the SEC to deny it, but that doesn't mean that it won't be denied and that there's still more work that needs to go into them understanding it. I think the SEC is a slow-moving organization in general. It's a government entity, government organization. They're not going to move as fast as the industry wants them to. I mean, as fast as startups do, obviously.
I remember when I came to US and stayed there, when I had to apply for driver's license. It took me a while, so I understand what you mean by getting the government organizations working.
A little bit of bureaucracy.
Cool.
Yeah, exactly.
Just quickly, I want to just, out of the blue, what I came to my mind. We haven't really touched upon it, but I would love if we can touch upon this question. But correct me if I'm wrong. U.S. institutions buying Bitcoin, right? Isn't that good for the U.S. economy? Like when we think about it, if most of the Bitcoin are among the U.S. financial institutions, isn't that a good thing for Bitcoin? Because I'll tell you where this question is coming from. I remember in 2017, there was a study done by Nomura, which is an investment bank based out of Asia. And they did an analysis and they noticed that when China for the first time banned Bitcoin, right? They banned Bitcoin a number of times. But when they banned it for the first time, a lot of then trading flow went to Japan because Japan was pro-Bitcoin at that time. And what they noticed is that holding Bitcoin by Japanese individuals actually helped in growing the GDP. So it's a study. If somebody Googles it, Nomura wealth effect for Japan holding Bitcoin, they did a study and it proved that it was actually good for the Japanese economy that the individuals held Bitcoin. And I'm just thinking, like, isn't it good for the economy that financial institutions of US are now paving the way and introducing these digital asset ETFs? Prices are increasing as long as these digital assets have fundamentals and merit, which we believe it does, and we talk a lot about it all the time. So isn't this good for the US economy? Like this innovation of financial instruments coming in digital assets?
I think it is. I mean, when you introduce sort of payment infrastructure, even if you think of the way I think of like public blockchains, even if the only thing that these things are useful for is like payments, that's incredibly powerful. Like, I mean, I've been dealing with just stuff with, dealing with clients and stuff and wire transfers and stuff. It's a pain. I spend a time on this, just tracking down wires, and it takes weeks and everything. I mean, if you can just make payments way more efficient, like that's good for the economy. Like the velocity of money and payments is important for the economy. I mean, Bitcoin in general, like if everybody's just, holding Bitcoin, storing their wealth in Bitcoin, is that good for the economy? I don't know. Like the economy is a complex thing, and if you're not recycling the capital and like spending it, and like there's definitely something to that like, but at the same time, if people are able to store their wealth, that should be good for the economy, I would think. So I would love to check out this. I have to check out this report by Nomura, study this a little bit because it's fascinating.
And look, I know we're going to touch upon eventually in this episode about Michael Saylor buying Bitcoin. But I mean, at a microeconomic level, from a company perspective, he holds Bitcoin in his balance sheet, and it's doing wonders for his company, right? I honestly, and I've spoken it often within my circles, I don't think the time is far where central banks are going to hold Bitcoin as part of their reserves. I think they're going to.
It could already be happening. It could already be happening. I mean, we do have El Salvador, who's got into it, and I haven't seen people really following up on this. I mean, they bought, they did buy a ton of Bitcoin, but they did buy Bitcoin and they made it legal tender, and I think the price of Bitcoin was around 30,000 or so. So that's obviously looking pretty good for them. And yeah, I mean, we don't know. It's possible that, and I think there's a few countries that are mining it already, that are doing some mining. I saw an interview with, was a CEO, I think, of Riot Blockchain, and he was expecting that every central bank is actually going to start mining it. And the reason for this is, if you're mining it, you're guaranteed to be able to approve your transactions. So they want to hold Bitcoin, but they also want to mine it so that they can guarantee that they can't be censored. And it was kind of interesting actually hearing him talk about this, where he's almost expects a future where you could have censorship on Bitcoin. And the only way to avoid it would be if you're mining the asset and you're controlling the transactions. So that was kind of interesting to hear. But yeah, I don't know. I think this is one of the things we may, the last cycle we had Paul Tudor Jones come into it. We did have, like the MicroStrategy. We had like Mass Mutual bought some Bitcoin. Like we may hear about like another country, maybe Argentina, like makes Bitcoin legal tender, or someone else like that. I am sort of, this could happen, or we just learn that they've already been accumulating. It makes sense. They do it with gold. Why would they not do it with Bitcoin?
Absolutely. Going to CFTC now. What is the regulator in the US doing with digital assets taxonomy?
Yeah, so this is like a boring story, but I thought we should touch on this. Like the CFTC stepped up and they approved some new taxonomy, came from like a subcommittee. This is really just, it's kind of like boring stuff, but basically what they're saying is we're going to define like what a crypto asset is, what a digital asset is, what a non-fungible token is, what an issuer of these assets are. There's difference between like, blockchain native crypto assets like Ethereum, and then an asset that has a reference, right? You can tokenize real estate, but there's something underlying there. And so they're sort of defining all of these things. And I just think this is like one of the first indicators that I've seen of regulators that are like, this is fostering innovation. Like the industry needs this to move forward. So it's kind of boring, but it's also in line with just, the industry needs standardization across many, many things. I've been watching, CoinDesk indices in conjunction with CoinFund has been trying to standardize the ETH stake rate. It's almost like, what is the price of Bitcoin? You have all these different exchanges. We tend to just like have like standards in traditional finance in like one place, and that facilitates robust markets when you get standardization. We need it even at the technology level with these blockchains, with different like token standards and wallet standards and interoperability standards and things like this. So it's a step in the right direction. It's nice to see the CFTC step up here. We haven't seen anything like this come from the SEC just yet, but just thought it was nice to see, and a sign of maturation, a sign that more regulation is coming. So
yeah, absolutely. I mean, traditional finance standardization is the benchmark for the advancement of the industry. So it's good that it's coming from a regulator like CFTC. I'm curious, I assume that you have dig deep into this taxonomy?
A little bit. Haven't read through the entire report just yet, but I kind of went through to see like what were the terms that they were really targeting. And it's kind of like the industry talks about these things. I write about these things, and we don't have like the way I talk about it's different from probably the way you talk about it. Like we've talked about
cryptocurrencies and crypto assets.
Yeah, I hate when people use the term cryptocurrency. right? So, and I call them crypto assets. I think it's sort of a misnomer to refer to them as currencies, but yeah, like we need these standards.
Yeah. Was there anything in your analysis of this taxonomy that you thought was odd or you thought could be changed at a later on? Like, was there any critique that you had from the taxonomy that you've read?
No, I mean, I honestly just thought it made sense. Like everything I was looking at, they basically are defining like, Ethereum and like what is Ether? There's no reference point for Ether. It's just, it's a blockchain native asset. And they're sort of going through that and saying Ether itself cannot be like tied to real estate or something, right? Whereas like you could mint tokens that represent interest in real estate. And then now you have a reference point. There's no reference point on Ethereum. So they're sort of like going through this and just making it clear how to define the types of assets. They get into like non-fungible, fungible, like they get into a lot of stuff related to stablecoins, to CBDCs and things like that as well. So it's just a way to standardize, I think. It's language, right? It's like language. Like
yeah, so the reason why I ask is because US is very unique, right? When it comes to having SEC as regulator for securities and having CFTC, which is regulator for, I guess, commodities and futures. Like, for example, a lot of people, and I know that we have discussion that I consciously never use cryptocurrencies when we do the rundown, although I might use it outside the rundown, but I'm always conscious. I don't want to mess with Michael, let's say. So that's why I don't use the word cryptocurrencies in front of it. Like, yeah, considering the taxonomy has been developed by CFTC and they look after commodities mostly, and a lot of people, like you and I, we often talk about that Bitcoin is a better version of gold. Are there certain crypto assets where they would eventually or already define as crypto commodities? I'm just curious how CFTC and SEC both will collaborate in creating a standardized taxonomy version for digital asset just for the US, because they both look at crypto assets differently, right?
Yes, agreed. And this has been a point of contention where you're right that the US is unique. I don't think that most regulatory, India doesn't. I don't think England or the UK has one governing body for their markets as well. So yeah, it is unique. And like it in some ways it's created like a little bit of like almost like a turf war with crypto, where it seems like they're fighting over who gets to actually regulate the industry. I think the crypto industry has preferred that it's the CFTC, but just the way that they're approaching the industry, and they've come out and said Bitcoin's a commodity, ETH is a commodity as well. That is something that will have to be defined. This is actually coming from Congress. So this distinction between like, when you issue a crypto asset into the market, and is that a security initially? Can it become a digital commodity later on based on certain criteria, based on certain decentralization criteria? That part is going to come from Congress, I believe. And there have been bills drafted there to basically provide a framework for how you can come to market and become sufficiently decentralized and then issue your token. And then those are digital commodities. And the CFTC would be the regulator of those markets. The SEC would be the regulator of, like when we talk about like tokenized real estate or tokenized assets where there's a reference asset, those are existing securities that you're just tokenizing. And then I think the SEC would have jurisdiction there. But yeah, it does kind of create like complexity, I think, in just regulation and how you actually regulate markets when you have two separate governing bodies there. But yeah, that piece is going to come from Congress, I believe, in terms of like what's a crypto asset, like digital commodity versus tokenized securities.
But yeah, look, the world watches regulation of these assets from the US because all the other countries mostly follow the US. Honestly, I'm still excited. It's been more than 2 months now, but still very excited with the Bitcoin spot ETF. Because when Canada did it, it didn't make a global thing, right? But now the US did it. Yes, price has moved. But also other countries are like, what are you doing, guys? Like, are you going to launch an ETF for your jurisdiction when Bitcoin is going to be $1 million? Then your institutional investors are going to get access to it when most of the alpha and value accrual has already happened. So I think people are going to eventually talk about it. Honestly, I'm not hearing that much of noise either in Australia or in India outside the crypto community, but I think it's only a matter of time. Like $100,000, $200,000 more it reaches, they're going to be like, what are you guys doing, man? Like, when are you going to launch the ETF version in our country?
Right. Yeah, you actually just gave me an idea as well to look at. I'm curious now if since the US approved the ETFs over here, did that actually create more AUM for these spot ETFs that were already in the market up in Canada? I'm almost curious now if more people bought them just because there's a US version of it. It is fascinating to me. Like, and you do have these ETH, staking products, total return staking products in Europe, nobody talks about it. It's like they don't even exist really. And it's not like Europe has pretty large markets as well. So it is interesting. It's almost like it's not real until the U.S. capital markets embrace it. So should we talk a little bit about our friend Michael Saylor and, just what he's been up to?
Man, this is exciting. Really want to deep dive on it. So let's get it started.
Yeah, let's get this started. I mean, this is interesting.
I love Michael Saylor, man. Absolutely love him.
Michael Saylor and made the big move into Bitcoin. I think they initially purchased Bitcoin in July of 2020. So this was part of what kicked off the last cycle. And what he's doing here, so they just recently announced yesterday that they have raised another $800 million at a 0.625% convertible senior notes that are due in 2030. And what are they doing with the $800 million? They are going to buy Bitcoin with the $800 million. So, man, I would love to just get in the room with this guy and figure out what is sort of the end game here, because it looks like he's just sort of attacking the dollar in some ways, where if you can just raise capital at 0.62% and go buy Bitcoin when Bitcoin's rising, 5% a day, it's a pretty compelling trade, right? And you have to think that other CFOs at other publicly traded companies are sort of looking at this. But yeah, I'm curious to get your take on this. The other piece of it is I'm hearing now that, MicroStrategy is getting so big that they may end up getting admitted into the S&P 500. And now you've got a company in the S&P 500 that's basically just owns Bitcoin. They do have a software business, which I think is doing okay, but it's really a proxy for exposure to Bitcoin is really how people think of MicroStrategy stock. So that means everybody owns Bitcoin. We talked about how once Bitcoin gets really big, everyone, you can't avoid having exposure to it. We saw this a little bit with Tesla. Tesla's in the S&P 500. They bought some Bitcoin, not a ton of Bitcoin. This is a little different. That's interesting because now you've got a company in the S&P 500. It's basically a Bitcoin company, and now you're capturing passive flows from everybody who's just in the market buying it. The S&P 500, which is retirement accounts, right? And that's not really leaving. So pretty interesting. This guy just won't stop. But yeah, curious to get your take on MicroStrategy.
Yeah, look, first of all, I'm surprised that even in this high interest rate environment, he's able to raise capital, and that also significant amount at a 0.625% interest rate. Look, I don't own, a massive company. I'm a private individual who has private investments. And I do know that once you are at a stature of a company like MicroStrategy, then there are a lot of people, a lot of institutions that are ready to manufacture instruments or create debt vehicles for you to raise capital at such a low interest rate. So I'm aware of that. And I think you said it before we started recording that you're surprised that why aren't other companies doing it? And I have the same, mind-boggling question for people who believe in Bitcoin or who've been exposed to Bitcoin. For example, Block. Block has invested in subsidiaries that are doing a lot of development around Bitcoin. Let's not take Tesla, for example, because, Elon Musk at times have questionable views about Bitcoin, and he believes Dogecoin is the future. I'm surprised that Block CFO isn't buying more Bitcoin, considering they actually have got 2-3 companies, like Spiral is one of them. Then there is another one of their subsidiary that are actually building infrastructure around Bitcoin or decentralized technologies. So if MicroStrategy is able to raise capital at such a low interest rate and then using the entire sum to buy Bitcoin, I'm surprised other companies, starting with Block, that is very deep into the decentralized technology and Bitcoin space, aren't doing something similar. And then what about Coinbase? Is it maybe because they want to diversify and they think they are already too much all in crypto, that they don't want to have Bitcoin in their balance sheet as a treasury asset? But look, if you're asking me, 0.625% interest rate as debt to buy Bitcoin, there's going to be due in 6 years when you're going to experience another halving event in 2028. If I have the resources, I would do that.
Yeah, I think, it looks like they're paying interest on that twice per year. So they're going to pay the interest on it. They have a software business, so they have cash flow where they can pay the interest and then just wait for that Bitcoin to appreciate. That's an if, not necessarily a when. But I agree with you. To me, it's sort of like, would you do this, right? If you could just get a loan right now, probably, right? You probably would do it. If you had the cash flow to just pay the interest, you obviously probably make that trade. So that's how I think of it. It's I would probably do it. Or if you're a large corporation, you've got a lot of cash on your balance sheet. You would think you want to diversify that into something like this. Regarding Coinbase, I think they're not known for this necessarily of like accumulating Bitcoin for their treasury, but they definitely own a decent amount of Bitcoin, Ethereum that's just like on their balance sheet. So, I don't know if it's like a really thought out, corporate treasury management strategy, just like Michael Saylor's doing, but Coinbase definitely owns some. The block, they definitely bought some, around the time that Tesla bought it in the last cycle. And I think they're still holding, who knows? They may still be, I haven't looked at what's going on, or probably the crypto community would have surfaced it if they continue to buy. We did see that Reddit, I don't know if you saw that Reddit came with their S1. Looks like they've been buying some Ethereum and some Bitcoin. Not a ton, but they're kind of using this strategy. So just interesting, man. I am amazed that he's able to get those loans at that rate to go out and buy Bitcoin. But it's worked out pretty well for him.
True. I think the Bitcoin spot ETF event for holding these assets in corporate treasury is going to happen when we're going to hear either Apple, Microsoft, or Google going out, or eventually somebody finding out that these guys also hold Bitcoin or Ethereum in their balance sheet. I think that will be the Bitcoin spot ETF moment for CFOs worldwide, that, hey, these digital assets, at least Bitcoin or Ethereum, can be considered as a corporate treasury asset.
I think I shared something on LinkedIn a few weeks back, just showing what has happened with MicroStrategy from like a market cap standpoint since they made this decision. They basically outperformed big tech, by a lot, right? They've outperformed Amazon, Apple, Tesla, like all these companies since they just went out and started buying Bitcoin. So pretty interesting. And, I don't know, like, the other question here is, like, in many ways, what is MicroStrategy? It's a proxy for exposure to Bitcoin. What is the ETF? It's the same thing. And you would think maybe this would, because there's an ETF and that changes the market structure, there's less demand to buy MicroStrategy. But I saw Michael Saylor, I think he was on CNBC talking a little bit about this. He made pretty compelling argument that, like, you're better off owning MicroStrategy than the ETF because there's 25 basis point. That's really the most obvious one. You're going to pay a fee to hold the asset, and you're not going to pay that to hold MicroStrategy. But he had some other interesting arguments to make, I guess, of why MicroStrategy stock is actually a better vehicle than the Bitcoin ETF, which was
amazing.
Interesting.
Man, I enjoy hearing him all the time. He's so compelling, and he comes across as a true believer in Bitcoin, no matter what other people talk about any other digital asset. He's just a great ambassador for Bitcoin, I think. I love hearing him, man.
For sure. He's got skin in the game, that's for sure. And I think MicroStrategy owns around 1% of like the total. They're right up there. BlackRock just passed them. So now it's not really BlackRock. Yes, BlackRock's custodying it. It's obviously, that's all, individual owners and whatnot. But so should we talk a little bit about to transition this a little bit over to some FUD or potential FUD. We don't know if it's FUD, but we're seeing this is sort of expected as you get into bull market. And we saw a lot of this in the last cycle. You will see sort of academic papers come out. I think in the last cycle, we saw this same academic at the University of Texas, Austin, John Griffin. He also wrote a academic paper on Tether in the last cycle. And I believe the general theme of that last paper was that, basically Bitcoin is being pumped by Tether, and Tether is just being minted out of thin air. There's nothing backing Tether. So Tether's just minting it out of thin air, and then people are using that to buy Bitcoin and drive up the price of Bitcoin. This was disputed. I believe it was just completely debunked in the last cycle. There's no evidence to show that that's actually what's happening. And if it was happening, and that's actually what was driving the price of Bitcoin, wouldn't Bitcoin just have gone to zero? It's just hard to imagine, maybe there is some sort of market manipulation going on. I'm not saying there couldn't be, but there's a new paper out now. I saw Nick Carter tweeted about it this morning, so it caught my attention. He was very active in debunking the original FUD article. We don't know if it's FUD. I haven't read this just yet. Shiv, you have not read it just yet as well. But the title of this piece is How Do Crypto Flows Finance Slavery? The Economics of Pig Butchering, right? So that's the title of this. It looks like it's an article about crypto being used in illicit finance. And this is, it's one of those things for me when I see this stuff, I just think to myself, like, it feels like the industry is being attacked because we know for a fact that the traditional banking system is where most of the illicit finance flows through, not just in terms of like total volume, but on like a percentage basis of the size of the entire like industry as well. I don't know how to react to this. It's sort of expected. I think the crypto industry is going to probably come out and debunk this one as well. And like, what's this guy's incentive? Is he just like, is this marketing? Is this just marketing for his firm? Like, I don't know. And who knows? We need to look at the report as well. We don't want to just write it off. Yeah, curious to get your takes on the first big FUD article.
Yes, look, I think journalists in a lot of sensational news channels would be proud to see this title. It's a very sensational title for
an academic paper. It's very sensational.
Paper. Crypto flows financing slavery. Yeah, look, I haven't read it, but it's a very sensationalist title for a research paper. First of all, generally research papers, they try to stay away from sensationalizing it as a title. That's just not an academic thing to do.
And just so people know, we're on the SSRN, like academic papers. That's where that can be found. And the title, it looks like clickbait almost, which is, you don't usually see academic papers written that way.
Yeah, absolutely. So the titles of academic papers generally are not like that. Yes, you made me aware. I wasn't aware of it previously, but you made me aware that Nick Carter had a lot of critique about this professor and what he wrote. I think so. This was in around 2020, 2021, around the Bitcoin Tether connection. And he, again, after seeing this, came out on Twitter quite recently and had some very good language to say about this professor. And so I looked into this professor, and I did notice that he's not actually just into crypto, but he actually makes, like, he does forensic finance. So he does a lot of research on other financial instruments as well, which included, I think so, collateralized loan obligations, those unheard Wall Street financial instruments that probably only 50 or 60 people know and trade between another among the banks. So he did a lot of talks about that, a lot of mortgage debt securities as well. And it was all around, for lack of a better word, shit that goes through among the stakeholders within Wall Street. So I think he targets TradFi as well with as much disdain as he does for crypto. I haven't read this one, but by any stretch of imagination, like just looking at it, how small crypto is, right? How unbelievably small crypto is compared to the traditional financial market. Traditional finance plays a much bigger role in money laundering. TRM Labs has come up with a report that showcased that the Bitcoin plays a single-digit percentage role in illicit activity. So for somebody to come up and say that, how do crypto flows finance slavery? I mean, there's much worse stuff that happens in traditional finance with that. Let's just settle that out for a second. And secondly, just quickly touching upon that Tether report of Bitcoin, I honestly thought that the professor, argued it reasonably well. From my recollection of reading that report, it was more around, talking a little bit about questionable relationship between Bitfinex and Tether and how, I do not know whether it's coincidental, but a lot of it had to do with the timing of Bitcoin price action and then looking at the Tether issuance on the blockchain. I do not know whether it's coincidental again. I did not investigate it further. So again, if Nick Carter said it, I got mad respect for Nick Carter. So if Nick Carter has debunked it, it's probably valid. But when I looked at that research paper by this professor from Texas about the Bitcoin Tether connection, I thought he had a reasonable argument there based on just reading that paper. The little bit that I read from this, I thought this was not at that par. So yeah, this probably could be a sign for the FUD season, considering Bitcoin is at an all-time high.
It feels like it a little bit. Yeah, the Tether stuff, this is something I actually want to go really deep and do a Tether. We work with some of the data providers in the industry, and it's something we would love to author a really, really deep dive on Tether. And one of the things I want to look at there is like, yes, is there a correlation between the market cap of Tether and the total market cap of crypto, right? So like, is there something going on there? Just because there's a correlation, just because crypto prices go up and more Tether gets minted, I don't think, correlation is necessarily causation there. There's just more activity on chain. People are, just dealing with stablecoins more possible. But yeah, I would just love to, like, as a truth seeker myself, just like really understand what's happening with Tether. This is something that's been going on for a really long time and Tether has brought this on themselves because of the lack of transparency, the lack of audits, which to me, I just don't understand why they can't come forward and sort of bring that transparency to the industry. I think the industry deserves that. And that's part of why crypto is such a powerful thing, is that it does make markets more transparent. So we'd love to see just the truth around Tether surfaced a little bit more so we can put some of this stuff to bed. But at the same time, like, Tether has been tested by the market many times. I mean, I always bring that up. And like that to me is the true test. Like, can you meet withdrawals? And I believe Tether met 10% of its market cap in withdrawals in like a day. That literally would put any bank down, right? That's a bank run. And they met all those withdrawals. So it tells me that it actually is pretty fully collateralized, I think. We don't know for sure.
Yeah. Just one comment that I want to make is that, and look, I love the research and analysis that you do, and I'm not saying it because you're my business partner and co-host. There's a reason why we collaborated, because I've got mad respect for the work that you do. So I would love to see, the further analysis that you do with Tether. You've already done some interesting analysis, which I loved, and people at the rundown loved it, by the way. The insight that 92% of Tron's activity is Tether, which is an incredible insight that not many people were aware of. So you're already doing some great things investigating Tether, and we would love to see more. But I just want to make a quick comment that the market structure, of course, has changed as well, right? Back in early 2017, when Bitcoin was like less than $4,000, this was early 2017, Bitfinex also was a massive exchange. And Bitfinex and Tether have got close connections. So now, of course, in 2024, fast forward 7 years, market structure are totally different. And these Wall Street institutions are going to play an increasingly more important role in Bitcoin price action and Bitcoin on-chain activity than any other business out there. The reason why I'm making that comment is that back in 2017, there were not many players that can, influence the Bitcoin price. It used to be the exchanges. There was no Michael Saylor as well, using convertible notes to buy Bitcoin in 2017. So back in 2017, there were just very few players that can influence the price action. And that's why I thought that, again, I didn't do further investigation as probably Nick Carter did, but I thought that the argument was reasonable. That's my comment to it. But of course, now market structure is totally different. And if somebody thinks that in present moment, or let's say last year, or even in 2022, that Tether played a massive role in influencing Bitcoin price, probably not. But I think in 2017, if we can go back in time and just investigate the market structure and the on-chain analysis at that time, it would be interesting to see what role Tether played, if any, or it's purely coincidental then. So that's just a comment that I wanted to make.
Yeah, I would agree. And these market structures are constantly changing. One thing, I'm wondering too is as we get more regulation, especially with stablecoins, and potentially you get stablecoins where they can share the yields because it's regulated, how does that impact Tether? Is part of the reason that Tether exists in this, we continue to talk about Tether, actually a result of lack of regulation in this industry, where like you had regulation, would Tether actually be at the market cap that it's at, or would there be more around these other more regulated, stable coins? I don't know. I think Tether actually is solving many problems, and it's actually proliferating in, emerging markets, and it's like actually banking the unbanked and doing a lot of things that crypto should be doing. So you have that side of it as well. And like part of the reason for that is that it's not regulated, that it's able to do that. So it's a tough challenge to solve. But I think the takeaway is that the market structure is going to change again. We will see if Tether is still the number one stablecoin like in the next cycle.
Yeah. And just quickly, at the end of the day, for all the entrepreneurs out there, it's a great business model, especially in a high interest rate environment. Creating those tokens, so that people can use the proof of reserves as a safety net and exchange these digital assets for a US dollar stablecoin while they're holding commercial papers and earning high yield on it. And that doesn't necessarily need to be shared among the Tether token holders. It gets shared among the shareholders of the company. It's a great, very profitable business model, especially in the high interest rate environment when you think about it.
An unregulated bank that doesn't share interest with its depositors. Pretty good business. But yeah, it is. It is. I think it might be one of the most profitable businesses out there. It's probably the most profitable crypto business out there.
I would reckon. I think last time they said they probably have less than 50 employees. My God, less than 50 employees.
And it is doing close to the revenue that BlackRock is doing with 10 trillion of assets under management. So incredible. Yeah, we should have a movie about Tether at some point.
Is this time to go on chain now and do some very innovative on-chain analysis that we've never introduced anybody on the Rundown podcast so far now, is it, Michael?
I think so. We're about an hour in already on this show, so I'll meet you over in the terminal.
Amazing. Let's go to the terminal.
All right, we are in a new terminal, Artemis. Shout out to Artemis. They released, this is interesting, a new product. And what this is it's a way, they've come up with an algorithm to identify what they believe are Sybil users, right? And, what's a Sybil user? It's essentially a way to sort of spam the blockchain. It's kind of like bot activity. We see this on Twitter, right? If you go on Twitter, especially crypto Twitter, there's tons of bots. They're not really real users. And we're seeing similar activity on public blockchains. And as we can see in this chart, a lot of Sybil activity that we're looking at Ethereum here. Currently, if I just look at kind of like yesterday, the number of users or Sybil versus non-Sybil wallet addresses, Artemis has tagged about 25% of the addresses on Ethereum as Sybil. So basically a bot, and what is really going on here? This is really due to the gamification of where we're at with crypto. We aren't at this mainstream level just yet, especially in a bull market. When you have lots of projects doing airdrops, we're seeing a lot of this at the layer 2 level currently. It creates an incentive for somebody to create a bot, and essentially that bot becomes a fake user where it's interacting with smart contracts and in some ways farming for an airdrop. And we think that's most what these Sybil users are doing. And we've talked a little bit about this. Token Terminal has a similar, it's not the same feature, but it shows the cohort analysis and whether or not users are coming back and re-interacting with smart contracts. And that's one way to sort of identify if something could be a Sybil as well. If there's an airdrop and you see lots of activity and then that drops off after the airdrop. But I think this is just a sign of we're still so early in crypto, and this stuff hopefully gets solved over time. One of the reasons that there's actually less Sybil activity on Ethereum is because of the gas fees, right? Even if you're a bot, you still have to pay gas fees. Someone has to pay that. That can help mitigate some of this. And we don't have the data on Solana just yet for Sybil users, but we looked at a couple different blockchains. So Ethereum, we've seen it's 25% currently Sybil users, but if you go back, it gets up to around 50% at certain times, just looking at over the last year or so. We also looked at, this is Binance BNB chain, and currently sort of similar, a little bit more Sybil activity, I would say, on Binance than on Ethereum, but you can see this, I'm not sure what spiked here. I'm just looking at, this was in towards the end of the year. There was a period here where 80% of the activity on Binance was Sybil users. That's not consistent. It seems to be consistently around 30% or so. As we learn more and as we go deeper with on-chain data, it's sort of endless, how deep you can go into the analysis. And as we get more sophisticated, we're just going to keep learning more and more about how these blockchains are being used. But I think this is just a sign of kind of where we're at with crypto. It's not mainstream just yet. And there are financial incentives for the creation of these bots, basically. And it's the same reason you see them on Twitter. Twitter is dealing with this same problem. That's part of the reason why Twitter rolled out the $8, blue check mark as well to try to mitigate some of this. Yeah, curious your reactions. Is this more than you would have expected to see, or?
Yeah, so look, first of all, shout out to Artemis. I mean, we have used a lot of on-chain analytical tool throughout the Rundown podcast, and we, especially you have tested pretty much every metric and feature of a lot of these on-chain analysis. So for Artemis to come up with this novel feature, which I believe is proprietary to Artemis at the moment, the Sybil feature, it's extremely insightful. So first of all, I'm very surprised that crypto blockchains as a platform have reached that maturity where we are seeing bot activity. So that was my first reaction, because we know that there is a lot of spams on all kinds of social networks, not only Twitter, all kinds of social networks, whether it's US social networks or whether it's Brazilian social networks or Indian social networks. Spam is a massive issue. My first reaction was, wow, it's entered the blockchain era, because like you said, there is, some level of sophistication involved. It's not just like creating wallets, right? They need to do some transactions as well. So that was my first reaction. My second reaction is that why this is very insightful, especially for us as educationists that we have been doing through the Rundown podcast, is that we are using these fundamental indicators to help people to know that how they can gauge whether this blockchain is fundamentally sound or not. And if we can find out that a majority of the interactions are Sybil, then that means that the fundamental indicators are flawed, right? Because it's mostly bots. Now, we do not know who is influencing this bot. That's another topic. But the reason why this is important, and I'm just going to quickly make people go to one of the interesting scandalous news that came in financial world last year, I think, was the fraud case that JP Morgan brought towards Charlie Javis, founder of a startup called Frank, if you remember, where the founder worked with a professor, a data scientist professor from New York, in order to fake their user growth for their platform. And then after 2 years, JP Morgan noticed that this is all fake. So she was able to get an incredible valuation, according, of course, the legal case is going on, but according to news, I'm saying, she was able to get an incredible valuation based on fake users. JP Morgan paid the amount and then later on realized that all this is fake. So these fake users, whether it's in blockchain or whether it's in a platform, centralized platform, when they sell it to a company, it all, creates the false impression. So that's why this metric by Artemis is extremely important and insightful. And I actually want to explore the other blockchains with some history. I would be interested to know about Tron and Polygon. How many Sybil's percentage do they have? Because, in the last bull cycle, they were growing like crazy. Amazing wallet size and all that. I would love to know about their Sybil percentage for some of the other blockchains now.
Yeah, no, I agree. This is like it's a way for us to just hammer down to the truth, right? What's actually going on? Like we may be able to compare the top 10 blockchains based on, users and total value locked and just there's a bunch of metrics we're constantly comparing these against to. And if we're using data that's including a lot of this Sybil activity, we want to parse that out. That's really, I think that the takeaway here is as I'm going deeper into this, I think when we're reporting stuff, having the ability to take out the Sybil stuff and compare on only what we know is like real users, and I think if you're a blockchain that has less Sybil activity on it, you want to unearth this, right? You want to be able to show the market that your chain actually has real users that are coming back every day. So yeah, I couldn't agree more. I think, we're so early. I mean, public blockchains are just so incredibly data rich. It's very similar to when you think about the early days of the internet, we were putting all this data into the cloud and everything, and nobody really knew what to do with it at the beginning. And then, Facebook and Google obviously learned that if you capture everything into your database, then you can kind of create ad markets and do all these things with that data. So I expect there to be a lot of interesting things coming out of public blockchains as well. We're at the stage where we're sort of just, we're just getting to the point where we're structuring this data to be able to see what's happening, but we're going to go deeper and deeper and deeper. And, hopefully the rundown is here for a long time reporting what's happening.
Absolutely, brother. Just quickly, just another point about the richness of on-chain analysis. And I remember in the last episode, we spoke about it as well, that, 10 years down the line, people would be like, this is so obvious. This is the future financial analyst profession, doing on-chain analysis. So as I shared with you recently, I did a guest lecture at one of the business schools that I'm associated with. And I know that you have spoken often about it, even before the rundown with me on the Proof of Work podcast. And you've mentioned it even also within the Ethereum investment framework as well. But when I was giving the guest lecture and I was giving them the demo of on-chain analysis using the platform, right? One of the students just raised their hands and they're like, oh, wow. So you mean, professor, that we do not need to wait for the quarterly report to look at the financials of a company? We can just do it logging in through the terminal, and we can do it on a daily basis, 30 days, 15 days, we can do it. And I'm like, absolutely. On-chain analysis is transparent. Blockchain is transparent. You can do analysis whenever you want. And you do not need an auditor to tell you that this is being audited. There's no reason for an auditor.
Right. I mean, it's incredible. You have this continuous financial statement. I think, the audit thing, that's interesting because I think we are going to see auditors at some point. And I've actually something I've thought a little bit about. Like, there's all these data providers out there now, and like in some ways they are sort of the accounting of this because they're actually structuring the data at that base layer. So I do think you're going to have a third party, but to your point, the audit's almost like the third party audit of the smart contracts and the validation of the network and like just the maintenance of the ledger. You have that, but I think you need somebody to sort of, there probably needs to be a trusted third party. And I'm surprised you're not seeing like PwC and the Big Four and stuff already started to get in here, where they are looking at the way that the data is being structured and presented, sort of bless what we see on some of these screens. But yeah, I mean, we'll see. I mean, there's just so many places this is going to go. When you think about it, if stablecoins take off, and that's the thing that we use for payments primarily, and everybody is using stablecoins, then like that means like all the economic activity starts to get tracked on chain. And then when you're looking at different wallets and you're looking at cohorts of various wallets, and like this data becomes incredibly valuable to companies. And, you know, just like the reason that Google is a huge company is they have the data and they sell access to that data. I believe we're going to see similar markets with on-chain data. And it's a little bit sad. I mean, we'll see. There's probably going to be privacy that gets introduced here as well. And we'll see if consumers care about the privacy with on-chain data. We're just so early. I think that's the big takeaway.
Yeah. And just quickly on that before moving forward, like I like to believe that I was late in Bitcoin and crypto. I think 2016 is late to get into it for somebody who knew it earlier. But I really, think that the profession of financial analyst, the profession of accountants, what we are doing is the tectonic shift in the profession. Like 10, 20 years down the line, frameworks, processes within companies that do so many accounting, auditing, financial analysis, they all would shift towards on-chain analysis, especially now that BlackRock has got a Bitcoin spot ETF and Larry Fink is now going on a media tour and saying that the future now, considering that Bitcoin spot ETF is a present, the future is all about tokenized securities. And if tokenized securities, even if they are going to be, let's say, on a company's private blockchain, I think they are going to move towards more of this real-time analysis rather than quarterly. Because when you think about it, the requirements of doing quarterly reporting from a publicly listed company was done back in the early 20th century. We need an evolution now. We live in such a high, fast-paced environment. If you're an investor in a publicly listed stock, finding out information about your company after 3 months, it is really slow, really slow. I think it's about time that we start seeing, the real-time or an increased frequency news about the publicly listed stocks as well.
Agreed. It's exciting. It's exciting where this is all heading. I love being sort of at the base layer of all this. That's you go right to the data. So that's been our strategy. Yeah, really, really well said. I think that's probably it for this week. Is there anything else before we wrap it up?
For all the rundown viewers out there, before we start recording, we always think that we're going to wrap it up in 40, 45 minutes, but we just have so much to talk to. We end up talking more than an hour, but thanks a lot, Michael, as always. Very insightful. Great show again. For all the rundown viewers out there, thanks a lot for all the love that you give to Michael and me. We continue to look forward for your support and your love, your feedback as well. Tell us what you like, what you don't like. If you did like and found it informative, please share it with your friends, with your colleagues. And until next time, it's a goodbye from us.
Yeah, special guest next week as well. So looking forward to that.
Yes, we got a special guest, right? Absolutely looking forward for that. And please tune in next week for special guest. Should we announce who the special guest is? Or should we?
Special guest coming from, we mentioned on this episode, there are now total return spot Ethereum staking products available in Europe. So we're going to have somebody from one of these firms issuing these products next week to learn all about that. So
exclusively on the rundown. Tune in next week. Goodbye now.
Thanks, everyone.